I would concur with that. That's Andreas Antonopoulos is, of course, a luminary in this space, making the point that you can't have, if you have fake prices, you'll have fake news. I mean, there's an old saying on Wall Street that price precedes news, because markets are very sensitive. They tend to react very quick before the news gets out. You'll see price movements. On 9/11, for example, I remember we were buying puts on Morton Thiokol, the top contractor for the booster rockets. No, that wasn't 9/11. That was the shuttle disaster in the 80s under Reagan. And so the puts had already tripled before the news hit the tape. Well, 9/11, of course, the options on the airline stocks were hugely active before the news hit the tape about 9/11. As a matter of fact, they were active a week before, which is another story. But so the price precedes news. And so if you have fake prices, you end up with fake news. So here, when you have manipulation of markets, and if you have interest rates are zero, and you can borrow money at 0%, and you have an unlimited credit line, and you can muscle prices around at will, that creates fake prices. And then if you have robots reporting on fake prices on the financial media, as Forbes does, then the robots are going to report on the fake prices driven by the fake news created by robots, and you have a virtual or a not so virtual cycle of fake news and fake prices. And then people interpret that as reality. And meanwhile, the underlying reality is completely different. You need accurate prices before you have accurate news.
Well, but that's supposed to be don't trust, verify. The prices are supposed to give you the verification of reality, and this led us to Bitcoin because I want to go back to when we were, Keiser report was covering the financial crisis, and we were covering gold and silver and precious metals and monetary issues and central banks. And in the lead up to the birth of Bitcoin, the Genesis block, and why he mentioned the chancellor on verge of second bailout of banks, is that all the prices, remember, in order to maintain the pyramid system of where we didn't rely on individual sovereignty, we relied on trusted bankers, we relied on central bankers, we relied on the Treasury to take care of us, to take care of the financial system. And they sent out fake prices of LIBOR rates that were rigged on behalf of the central bank. The British central bank it ordered these bankers to rig LIBOR. Now they're all going to prison because the central bank has to send somebody to prison, right? The prices of gold and silver, all these prices they were trying hard to manipulate in order to make sure the population, who were the chumps in their Ponzi scheme, continue to have faith. They were basically operating the BitConnect of the last century.
What's up?
Man, this is so true, and that's why I really recommend to my audience, please watch Max Keiser. I know that RT gets a lot of bad publicity and is obviously not the most credible news source, but stuff like this you'll never see in fast money or mainstream media, and they're so right. And this is all, like I said, do your own research. Obviously, what they're stating could be false, but there's the internet and there's Google. If you do your research, this is so true that plenty of banks have got caught for manipulating prices in markets. And that's why a lot of people will make the argument, oh, crypto. And right now, because the market cap is so low for crypto, it is very easy to manipulate. But as this market grows, it's going to be a lot harder to manipulate. That's the biggest issue I do have with the stock market, with commodities. It's controlled by a very, very few number of people. And like I said, they've been caught by governments and they've had to serve fines, and there's been penalties for them manipulating the price. And like I said, it's so true. They were running a BitConnect Ponzi scheme, and depending on where the governments are, most of the time they will get punished, and it's usually good justice. But in the U.S., we've had so many people get caught for stock fraud, and I'm just going to bring this into my own opinion. I live in Newport Beach, very affluent area, and it's hilarious. Two of my most wealthy friends in Newport Beach, their families are wealthy because of stock fraud. They actually, and I'll make a clear one that everyone can go Google, is Broadcom. the Samueli family. They own the Mighty Ducks. Sorry, the Ducks. I mean, they're one of the most wealthy families in Orange County, and it's funny because a lot of their wealth was created by stock fraud, and obviously he had to pay a fine. He's donated a lot of money to universities, but at the end of the day, it's just funny that you can commit these kind of crimes. You pay pennies on the dollar, and what do you know? You're able to keep all your wealth even though you cheated. And like I said, hopefully with cryptocurrencies, it's going to become better. Like I said, I'm kind of an optimist where with the crypto, it's going to be harder and harder, especially as people become more savvy, as the market becomes more open and transparent, where this manipulation will not happen. But I mean, there's always going to be hustlers. There's always going to be people running schemes. So obviously, as an investor, you want to be smart. You want to do your research and just be. It's open knowledge that a lot of times, by the time you find out the news, you can't time it, and that's why I don't really believe in day trading. You can't really manipulate that kind of stuff. All you can do is be a long-term investor. So when it comes to investing for me, I think of long-term ideas. You can't time the market, but if you really believe in something, and you think that there's a lot of potential for growth in a year, 2 years, 3 years, I think that would be your best bet for investment strategy. But anyways, let me know what you guys think, what Max Keiser has talked about, and hopefully you guys like this stuff. Let me know, and I will talk to you guys soon.